QE3 is complete, and now we wait for QE4. But we didn't have to wait long for additional quantitative easing in the global economy as we see Japan beginning unlimited money printing. That's right, they took over where the Federal Reserve has left off, and they are now engaging in what I am calling unlimited money printing. They have opened the taps and they are letting this go. Let's look at this here out of Bloomberg. Bank of Japan stands ready to buy every new bond Abe's government issues. And they're saying here they're doing a record stimulus, and they are going to buy every new bond that the government issues. So when there are no buyers left, when nobody wants your products anymore, they will go out and print up the money from thin air and purchase it. So right here, the highlighted portion, the Bank of Japan said it plans to buy 8 trillion to 12 trillion yen, that's about 100 billion of Japanese government bonds per month under a stepped up stimulus it announced today. That gives Kuroda leeway to soak up the 10 trillion yen in new bonds that the Ministry of Finance sells into the market each month. So they get rid of their debt, and this is basically opening it up to the public, but the public doesn't want it at all, so they have to actually print the money out of thin air to buy it. This is no different than what they were doing with all of these previous things in the United States, how they just literally print it up and they are buying the garbage. I've gone into it many times before, showed it in my book as well, how we show these diagrams, and they explain to you that this is debt that the government has packaged up, put a nice little bow on top, and they sell it to the investors. But when the investors don't want it, it sits in a big pile, and that will obviously bring up the balance sheet of that central bank. Japan is doing that right now. Now, this has caused something very interesting here. Look at this. If you look at the point at which the blue line, that's the stock market here, and the Japanese stock market, showing you how as soon as they made that announcement that they were going to print record amounts of money, opening the taps probably forever until this collapse completes, this is an immediate spike upwards, followed by a gradual continuation of that. And this is what really matters here, is that no longer is reality the basis of these markets. It all depends on printing money. The Federal Reserve, the ECB, the Bank of Japan, and every other central bank around the world is engaging in a race to the bottom. And we are witnessing that right now. Why in the world would the stock market go up if these investors are seeing that this is going to make a depreciation of the value of that currency? This, of course, doesn't make a single ounce of sense. Now, if you look at this right here, this is Venezuela. We all know the troubles that they were facing, but look at their stock market. It increased dramatically. Now, does that make it a good investment? And I would suggest, obviously not. They are in very big trouble. Their currency depreciated rapidly, and as a result, the stock market increased. And we also have seen this with Argentina. They are really in bad shape right now. Their currency is in really hard times right now. The people there are suffering with major inflation rates, but yet the stock market performed well. But again, it's not the fact that they're doing any better. The stocks aren't worth any more. It's the decline in the value of their currency. That's what's happening right now in the US in particular. And you can see how the stock market hitting all-time highs. But of course, that is not what's really a representation of the real economy. So let's go on here. This is talking about the BIS, the Bank for Central Banks, has been a long-standing skeptic about the benefits of ultra-stimulative monetary and fiscal policies, and its latest intervention reflects mounting concern that the rebound in capital markets and real estate is built on fragile foundations. Sounds a lot like what I've been saying here on the channel and in my book, and basically that's the BIS, okay, the Bank for International Settlements. So it's quite interesting actually that they talk about it like that. The BIS is very skeptical about quantitative easing programs that they're doing and the easy money policies of low interest rates. This information is quite interesting here. You're looking at the highlighted portion at the bottom saying that Kuroda, the governor of the Bank of Japan, is actually on the board of directors of the biz. Now, this is obviously somehow a conflict of interest, especially when the biz is coming out and saying how dangerous these type of policies are. But you're looking at an entire system built upon debt. And in fact, it goes far beyond the GDP of the world, far beyond these trade surplus and all of these debt that the countries owe each other and the central banks owe to their people they're supposedly representing. In my book, I quoted this: the official statistics are shocking and almost unbelievable. What 1.5 quadrillion worth of derivatives exist and are traded on the exchanges. And this right here was, I am quoting the over-the-counter derivatives from the biz. So there they are actually talking about and calculating and documenting how many derivatives are actually out there. They have a problem with the debt. And then it's quite interesting that the actual governor of the Bank of Japan coming out and being a part of that. But it's quite interesting the way they actually engage in these policies, because the system itself is built upon debt. It is not built on real wealth. It is not built upon an actual economy. It is only built upon what the Federal Reserve, what the ECB, and what the Bank of Japan and all these other central banks are doing. Immediately will affect what the stock market does based on what they say. And this is something else that connects in here. And this is an activist group in the United States has been carrying out deeds that some might think the stuff of dreams, buying and canceling other people's student debts. Now, the reason I mentioned this article out of the BBC isn't necessarily to get into that context, but this portion here at the bottom, the highlighted portion, debts can be bought and sold in the financial marketplace. Student debt spiraled to $1.2 trillion. So we have a system that allows debt to be used as a tool, and that's a tool that they are using against us as a weapon. And basically this has allowed them to pursue these very reckless policies, and we are being used as tools when they unfortunately don't allow us to control the system or have any sort of input in it. They are maintaining these policies. They are pushing our currencies down by engaging in a depreciation of its value. If you found this video informative, please give me a thumbs up. It helps me out a lot. And don't forget to share the videos on your Facebook, your Twitter, and all of the other social media platforms. And of course, don't forget to become an insider. It's where I give out all my best intel for free, and that is available at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.